I'm here with Eduardo Gorab, Managing Director in Global Research and Strategy at LaSalle, and Matthew McCauley, the Global Property Sector's Research Director for JLL. We have just released our ISA focus report called Transparency and Strategy, which looks at the implications for investment strategy of the recently released JLL/LaSalle Global Real Estate Transparency Index, or GRETI. Matt, you are one of the lead authors on the GRETI report for JLL. Tell me, what is the GRETI and what are some of the key findings of this year's report?
Thanks, Brian. For those who aren't familiar with the Transparency Index, JLL and LaSalle in partnership have been producing this for 25 years now. And it's a really comprehensive overview of market transparency and ease of operations in nearly 90 countries, over 150 cities around the world. It measures everything from investment performance data to market fundamentals, the legal and regulatory environment, and sustainability practice. So a really overarching view of transparency in each market. And if we're looking at how much market conditions have shifted over the last 24 months, not only in real estate capital markets, but in terms of market fundamentals, the economy, geopolitics, then we think transparency is especially important at times like these. So if we're looking at what the index tells us, there have been some really notable movements at the individual market level. India has been the top improver globally. Asia Pacific has seen the most progress in transparency across the regions, but the really broad story is that the markets that we put in our highest tier, the highly transparent markets, have been making the most progress. They're able to leverage their already deep provider ecosystems, their technology ecosystems to really bring more data to the market, to really set a new standard for what sustainable, transparent, clear markets look like for the future. And as we're looking out over the next few years, then we can see transparency becoming more important in some of the key themes that are coming to the top in the capital markets. And that can be on the debt side, where private credit transparency is really in the spotlight at the moment. Also in terms of diversification across property types, and more investors looking at those emerging asset classes. And then in terms of sustainability as well, where we're at a real tipping point in terms of the data and the consistency of all the reporting that we're all going to have to do over the coming years.
So, Ed, our focus report takes those key conclusions from the JLL LaSalle GRETI report but focuses on investment strategy implications. What are the pieces of that are most relevant to the strategies of investors like LaSalle and our clients?
Absolutely. So as you've just mentioned, our focus report is really takes the angle of the practical implications for an investment manager when looking at the really important work that is done in GRETI. And some of the main conclusions include things like, firstly, the fact that transparency has fair value implications. So putting that very simply is that the ability to get a clear view of markets tends to make them more liquid. And liquidity is one, granted, of many factors that helps investors determine the level of return that they should command for investing in real estate. So, all things being equal, more liquid markets should have lower required returns. From a similar angle, the GRETI rankings have really helped us be even more confident in our focus on those most transparent markets. Matt has already alluded to the fact that debt market transparency is improving. This is being supported by the creation of performance indices, both in the US and in Europe. And these developments really make an already attractive route to accessing real estate exposure even more attractive. Changes in those sustainability scores were one of the most notable movements over the last 2 years, and progress on green regulations and reporting regimes mean that it's really more important today than ever for investment managers to understand them, gather data, report on them, and really based on the work that we've outlined in our Value of Green report released earlier this year, we also expect that the pace at which sustainability related factors are priced in will accelerate. Now, finally, on geography, some of the biggest gains, as Matthew mentioned, were in Asia Pacific, and we do expect these to facilitate cross-border investment in the region and help investors increase their allocations to Asia Pacific over time.
So you both hit on one of the key takeaways, but that some of the biggest improvers this year were the markets that were already highly transparent. So Ed, can you tell me a little bit more about what that means for strategy and LaSalle's approach to market selection?
Yeah, I think, in my opinion, the best way to test an investor's true preferences is by looking at what they do rather than what they say that they do. So to dig a little bit into that, we're going to contrast a few numbers. So first, here at LaSalle, we estimate the size of the institutional investable universe every year. And our newly released estimates show that around 70% of institutional quality stock is concentrated in those highly transparent markets. Now, data from JLL shows that highly transparent markets attract around 80% of all transactions. But when we look at LaSalle's AUM, we see that over 90% of it is concentrated in the most transparent band. So our positioning is heavily skewed towards those highly transparent countries, even more so than the investable universe or even more so the transactions. So it is really encouraging that highly transparent markets have made some of the biggest gains over the last 2 years, as it really underpins our view that these markets should be the bedrock of our investment strategies. So that's very much a country level picture, but what about looking within each of these countries? And one of the important trends that was highlighted in the index this year is that emerging sectors keep gaining in terms of transparency. So here at LaSalle, we've been using the Going Mainstream framework for some time, and it thinks about how sectors become more mature over time and greater transparency around both the operational performance and pricing of these property types should help expand the universe of transparent but niche sectors for investors to access. If, on top of that, we keep in mind the fact that the definition of core investing for real estate is evolving, and by this, what I mean is that among many other things, we should favor property types with more stable cash flows, even if those cash flows are achieved through a more operational setup. If we think of, say, data centers, for instance, or shorter lease structures, thinking perhaps of student accommodation or senior housing or other parts of the residential market, as those sectors gain transparency, it means that we are better able to prove the stability of those cash flows and strengthen the case for holding them in our portfolios. So if we put together both of these ideas, we are very positive on emerging sectors, but particularly those are in the most transparent markets. And what I found really interesting in the Grady report was that the report gives weight to this view. It highlights that institutional investors are more likely to be active making investments in niche sectors in highly transparent markets than they are in less transparent markets.
Thanks, Ed. So a pretty good summary of LaSalle's take on those results. Just in a few words, Matt, your reactions from the broader universe of JLL clients to the report. I know you've been doing various presentations all over the world, you and your colleagues. And how has been the reception to this year's Grady?
It's been really positive. We know that just about every major cross-border real estate investor uses the Grady in one way or another. And we've been out talking to a lot of those institutional investors over the last few weeks. But we also have a much broader user base beyond investors, and it's relevant to our occupier clients as well as they think about market selection and the different steps that they need to take, opening offices in different locations or opening manufacturing facilities. So definitely relevant there as well. And then we always have very good engagement from governments who are looking to increase the transparency of their markets to make them more attractive for investors, more conducive for developers, and to just raise the institutional quality. And so we've been engaging with a number of governments as well. And then beyond that, the academic community also uses the index quite widely. And so we've been engaging with a number of universities and academics as well.
Well, thanks, Matt, Ed, for joining me today. If you want to read the full version of the Getty report, there's a link to it on the Insights page of LaSalle.com, where you'll also find our focus report that focuses on the investment strategy implications of transparency. Thank you.